Welcome back to Making Money Matter, ladies and gentlemen. My name is Kerry Stevenson. I'm your host, and today I am speaking with David Dickson. He's the CEO and Managing Director of Lake Resources. You all know I've spoken to him before. ASX code is LKE. They're in the lithium market. Some of you out there are going, lithium? Well, can be contrarian as well. Don't just go into those things that are all hyped up. Perhaps it's time to have another look at Lake. The last time I spoke to David Dickson was just before the DFS came out. He said it was going to come out in December. It did, but it was just after we'd spoken. So I'm going to talk about the DFS. I'm going to talk about partnering. We're going to talk about there's a new team in town in Argentina. So for those of you that don't know, Lake Resources have got a very large lithium project in Argentina, their Kachi project. They've got some other projects as well, but the focus at the moment is on Kachi. David, thanks so much for joining me. I believe you're in Melbourne. You're on a big roadshow throughout Australia. So welcome to Ausland.
Yeah, no, thank you for having me again. Yes, I've been in Australia now for a few weeks, trying to get around as many investors and groups as I can over, been Sydney, Brisbane, Perth, Melbourne, back to Sydney. So it's been a long trip, but a good trip.
Well, I'm sorry that you and I haven't caught up in person, because you've been there and I've been here, and then I've been over in Perth and you've been in Sydney, but never mind. I've got you on Zoom, which is just as good in a way. First of all, if we can start off, if you wouldn't mind, I think we should start with the DFS. Last time when I finished up, I said the DFS will be out imminently. Give us the high level overview of what the DFS has shown you.
Yeah, so if you think back to, the big news for Lake last year was in June when I gave the operational update.
Yep.
Where we had big movements in CapEx, some movement in OpEx, and then obviously a shift to the right of first lithium by around 3 years. And so the DFS validated what we were talking about with, our CapEx came in at 1.38 billion, which was mid-range of the range I gave back in June. Our OpEx is just over $6,000 a ton. Now that's to produce lithium carbonate battery grade, just to clarify for the market. But our timing is still end of 27, ramping up production in 2028. So the timing stayed the same. The CapEx and OpEx came in mid-range of the ranges that we gave back in June. So ultimately the DFS was a validation or a verification of the work that we'd done previously. And obviously we're pleased that we got to that point, and hopefully give the market some confidence on we get an idea of what we're doing in terms of building a capital project. I always like to remind the market is, comparing this to a Western Australia spodumene project is really complicated, because we're essentially doing a mine and refine in the same location, right? So, and 80% of that CapEx or roughly 80% of that CapEx is actually building a chemical plant. And right. Another 20% is on the mining. So I always like to highlight to people that, that's what's important. There's another two things that are really important in the DFS that we verified, or the work that we did through 2023 was around both developing the actual reservoir or the resource base itself, and then secondly, doing a lot of work around the DLE technology. So in the resource base, we did a lot of work. We drilled deeper. We drilled, further around our tenements, and we demonstrated that, we've got a large resource base. In fact, I think what we said in our presentation is we only need to extract something like less than 12% of what we prove from a measured and indicated basis from the size of the resource. So that tells us we've got a large resource, and we found good and better quality of brines. And in fact, more recently, we updated the market that our average brine content, our lithium content in the brine has moved up from the low 200s up to 250 to 300. And I like to remind our investors that we designed everything around a lithium content of 205 milligrams per liter, where we're up to 250 to 300. So
what is, sorry, David, just for those of us that don't quite understand that, what does that mean moving from 200 to 250, does that mean that you get, I'm just not quite sure what that means.
Yeah. Yeah, it means we have better lithium content in the brines, right?
Okay.
And basically what we're saying at this DFS stage is we designed everything at a 205 milligrams per liter content, lithium content in the brine. What we're now finding is somewhere between 250 to 300. So that would tell us is that we're designing on the conservative side. Now, what we haven't done work is to demonstrate, does that mean we produce more lithium based on the size of the plant? Or is it a case we could potentially reduce our level of capex? That is something that we'll develop as we go through the next step of doing the feed work, right? But basically trying to tell the market we're taking a conservative position on the DFS. Okay.
Yeah.
The other thing that we spent last year was demonstrating the technology. And technology is obviously where a number of investors are still getting hung up, and there's a lot of naysayers in the market with regards to DLE.
Yep.
So the first thing, again, to highlight to investors is DLE is a very generic term covering a number of technologies. Our technology is focused on the ion exchange technology, and I like to highlight that it is different from adsorption, which is a technology being used by other companies. And ion exchange has been around for a long, long time, for over 100 years, right? So it's not a new technology. This is obviously a new application in regards to lithium extraction from brine. But what we did is we ran the demonstration process for over 9 months. We put over 5 million liters of brine through this demonstration plant. And this is demonstration plant at Kachi. So it's Kachi brines that go through the plant. And from that, we extracted, we produced 200,000 liters of lithium chloride. We then converted about 2/3 of that into lithium carbonate battery grade, starting from our samples of 99.8% purity, rising up to 99.9% purity. So great results. And then we've now finished work around that plant. But basically, what we're trying to do to the market is demonstrate that the technology works. We're happy with the technology. And I just got to keep on working with investors to understand that the technology is not the challenge with this project. The technology works.
Okay, so what's the challenge with the project then? Is it power? Is it what?
I mean, there's two aspects to this. I mean, what I'm focusing on now is how do you strategically deliver Kachi, right? So from a technical operational side, technology works. Now we'll move into the next phase of we're looking at things from feed, looking at getting a position on the power. We submit our EIA, environmental impact assessment, at the end of the first quarter. So a number of things like that. So, and those are things that are what I would call kind of natural progression as we get through developing a capital project. Where my focus now has shifted is with the level of capex and with the size of the project is moving forward is that we need to bring in a strategic partner or partners to realize the project. And that's what we announced with Goldman Sachs back in November of last year. So Goldman Sachs, we announced that they were going to run a process of looking at strategic partners that would come into the Kachi project in some shape or form, whether that as an off-taker, bringing in equity or other forms of capital that allows us to develop the Kachi project. And that's now where my primary focus is today.
Is that process going as well or better than you expected? What is that strategic partnering process? What does it look like, and how long will it take? Because that actually
so
a massive that will be, once that process is through and you've got some strategic partners, that's a game changer, I would have thought, for the company.
Yeah, this is probably the most important thing that we're focusing on today, right? Is partnering process, because it will define or likely define where the offtake goes, and as part of that process, then lead to what is the form of capital that comes into the company that ultimately is the basis for how we finance the project, right? So we have gone, as part of this process, we have gone out to a number of groups of people, from battery manufacturers, car manufacturers, other producers of lithium, oil and gas companies, sovereign wealth funds, some private equity. So we're casting a wide net around a large number of companies to see what are the potential permutations, options for bringing partners into this, right? But ultimately, what we're looking at is how do we bring in the capital that's needed to make this project move forward. So, in regards to the process itself, we only launched it post DFS because we needed to complete the DFS. You got to prepare a virtual data room, which we're now complete. Teasers have now gone to a large number of companies, and now we're at that process of some early calls. The next step of this process is then some companies would move to some sort of NDA, non-disclosure agreement, and then you would expect to see interested parties coming in once they've done their evaluation, let's say kind of April time. And then the process would hopefully shrink down to a number of companies that would lead to some sort of agreement, let's call it Q3 before the year end, that sort of time frame.
It leads me nicely. There's a couple of questions around that, and I'll get to the capex number, which is quite big, 1.38 billion. Let me come back to that. But before we go on to that, when you joined, which was I think about 18 months ago, when you joined Lake Resources, I think the price of lithium was about 82,000 a ton, and as I speak to you today, it's about 13, 14. Big difference. And there's a lot of people turning around and saying, it's all over. There'll be new technology. Don't touch lithium at the moment. David, you're very, very involved in this area. I'd love to hear your thoughts on going forward. Do you think new technologies will change that outlook, or do you think people are being naive and that the supply demand is not now, but it'll be coming just as you're getting into production? That bigger picture would be interesting.
Yeah, I mean, I did come into the market, and lithium was moving from $70,000 a ton up the way. So I thought, hey, this is a great commodity to be in. Obviously, we've got lithium pricing today of less than $14,000 a ton for lithium carbonate. At that level, it is very difficult to see which projects in this industry actually move forward. Mm-hmm. You've seen in the market a number of projects that have been put on hold, a number of projects where production has either been reduced or ramped down. So it is clear that at this level of price in the lithium industry doesn't move forward. Now, what the disconnect here is that today the market is producing close to 1 million tons of lithium per annum. If you look at longer term forecasting, and let's just pick 2030, there's a number of forecasts out there, but everything points to say that even on the low end of the forecast, is that demand for lithium is going to be around 3 million tons and above. I think Albemarle were out last week. They downgraded their outlook and had the lower end of the range of something like 3.4 million tons per annum. No matter how you look at it, is from where we are today to 2030, we've got a major step in terms of increase in lithium production. Now, the other side of that argument is the demand side, which is to say, well, does EV penetration continue at the rate that it's progressing? And I think what Albemarle we're talking about is even at that lower end of EV penetration, demand for lithium still has to grow by threefold. And so you're looking at lithium pricing today, obviously it doesn't reflect where the market is going to be in the next, let's say, 5 to 6 years time frame. So that tells us that the market, that a number of projects have to move ahead. Now, for Lake Resources and a number of companies who are in the DLE space, production is still a number of years away. I mean, we're still talking back into 27, fully ramping up into 28. And then if we move to a second phase, 2030 onwards. So that is in that time frame of where people are talking about where there's going to be the large deficit, right? And so I think there's a big disconnect from what is spot price, which is the price that people talk about today, versus where the pricing of lithium going to be in 2030. And I think for investors, that's obviously it's quite difficult to get your head around, is that, thinking about lithium pricing at less than $14,000 a ton, why does it suddenly move to, north of 20 and beyond in later years? The other thing I'd add to that is you've got a spot price on lithium based on a small amount of lithium traded on the spot market versus what is traded on long-term agreements.
Okay.
And as we look at our offtake agreements, we're in discussion of offtake agreements which will last for a number of years, whether it's 5, 10, whatever. We won't be selling lithium in the spot market. So the other side of that is you have car manufacturers and battery manufacturers, particularly car manufacturers, who I believe are concerned about how do you hedge your pricing on lithium longer term from 2030 onwards, when you start to see the real ramp up of EVs. So I think the market is in still flux or confusion, trying to work out what is this like longer range. However, today, unfortunately, spot pricing is showing that there is an oversupply in the marketplace today.
Which doesn't necessarily continue, but I wonder, does it worry you that maybe a new technology could come along for electric vehicles that could change the demand for a product like yourselves?
I get asked that question quite a bit. I mean, if you look at different forms of batteries that are out there today and what people are looking at longer term, lithium still plays quite an important part in all of these things. And then the question is there another technology that replaces, batteries completely? People talk about other forms of energy. I think that a lot of that is still quite far out. And, you look at the investments that are being made today by car manufacturers and battery manufacturers. These are investments to cover quite a length, a span of time. And these companies wouldn't be making those investments around, significant changes in technology. So I think that today, I think we're comfortable to say that lithium will play a big part. And even if there are shifts in technologies over this next, 1 or 2 decades.
Let's go back to the DFS and the capex at being, almost 1.4 billion. It's a big number.
Yes.
Yeah. Are you comfortable with that? And I guess from an investor point of view, could you look at doing, I always look at these things and think, could you start small? Could you start smaller and get some cash flow coming into the company rather than saying, you know what, we're going to build a big chemical plant and we're going to do all this in a big way? Couldn't you potentially start a bit smaller, get that cash flow moving, potentially get investors a little bit more comfortable?
Yeah, so the way to kind of think around this is at some point you have to define what your DFS is going to be, right? So you have to define a size and time frame, etc. And so we looked at a number of sizes. Now, come back to the Lake proposal, is we're looking at a project to develop 25,000 tons of lithium carbonate battery grade. We're going to build that plant in 2 trains, right? 2 trains of 12,500 tons. So we bring the first train on and then we bring on the second train. That is what's in our DFS today. Now, and that's what we're focusing on. However, as we get into, and there's a number of other logistical and commercial reasons for that size, right? One, you could become too small. Today, if you were to say to me, let's build a plant for 1,000 tons, it's too small. Scale would actually make it costly, right? So you get to a certain point where you've got to get to a certain amount of scale where the economics actually start to stack up. We also looked at it from a power base, how much we could work with. Power base, you got to look at logistics. So we came up with this number of 12,500 tons per train. Now, as we get into discussions with strategic partners, potentially that could change because strategic partners have different requirements. We're designing a plan on how we think the size and the demand is, our strategic partners could have a different view of life. But from a technical operation leading to a commercial evaluation, we ended up at the point of trains at 12,500 tons. We bring the first one on and then the second one. So is there a lot of flexibility around this as we progress now to the point of making a final investment decision? Yes, there's a possibility that it could be some changes, but today we're still focusing on 25,000 tons phase one.
There was talk at one point about going up to 50,000 tons. Are you saying, no, let's be realistic, stick at 25?
Yeah, and I mean, end of the day, it's nothing to do with technology operations. It's purely driven by capital and access to capital. I mean, you look at the size of resources today. I mean, if I'm at 1.38 for the first 25,000 tons, I'm not going to say it's 1.38 for the second 25,000 tons, but it's still going to be a significant number.
Got it.
So we got to be realistic and you know, as I said before, it's you got to learn to walk before you run.
Totally agree. Final investment decision is when's that going to be happening?
So we've always indicated that the earliest it could ever be is once we get all the approvals from environmental impact assessment, right? That those approvals tentatively we think is somewhere at the end of Q1 of 2025.
Okay.
So once you receive those approvals, and then you go through lots of internal approvals, get the partnering process in place, get the banking support in place, then it's sometime in, I don't know, Q2 2025, that sort of time frame. That still puts you in production for ramping up in 2028.
Okay. And this is not financial advice, ladies and gentlemen, go do your own research as well. But I guess what I'm looking at is, as our late Queen would have said, it's been the annus horribilus, the share price. It's kind of sitting around that 12, 13 cents. Do you think, because now you've built the base, you've proven the DLE, the news flow going forward, are you comfortable that going forward there will be value, not consolidation, but some added value for shareholders going forward? In other words, the worst is behind you. I'd love to just get your views on that, David.
Yeah, well, look at it. We've got a project that's now well defined. We demonstrated in the DFS the economics stack up. There's clearly a demand need for lithium 2028, 2030 onwards, which ties into our time frame. The headwind today is lithium pricing.
Yeah,
that is the main head. And if you look at if you look at Lake stock and you look at a number of other stocks, everybody's really being hit hard because of lithium pricing. So, as investors look at this, one of the things we always look at is, what are the projections on lithium pricing for 2024 and onwards? Because that's going to impact a lot how stocks will move over this next period. For Lake separately on news flow is going to be around things such as submitting our environmental impact assessment, and we're targeting that at the end of this quarter. And then any updates that we can provide to the market around our strategic partnering process.
Yeah.
Because really that'll determine, time frame, and a lot will be said around the companies that we partner with. Where does the offtake go? Obviously a lot of the information will be confidentially commercial, but obviously if there's an opportunity for us to release news to the market at certain stages, then we'll try and do that. But the big piece of news for us is going to be around that strategic partnering process. Unfortunately, that makes it kind of boring for investors because we don't have a lot of activities. I mean, we've stopped the work on a demonstration plant, and we've stopped the work around developing the reservoir. We're no longer drilling at site. So we don't have a lot of activities that are happening. The main activity is the work around the partnering process,
which is really important. I'm sitting here in Australia. You're also in Australia at the moment. Western Australia has got the hard rock, which gets sent across to China. That's got a little bit of a challenge, especially with the USA. When I last spoke to you, there was an election going on. Now that election is over, Argentina, do you feel comfortable there? And also, do you think all this sort of slight upset with China is a good thing for Lake in your jurisdiction and potentially where your customers are located? Without getting
Yeah, it's I mean, it's still early days, right? So the new president took office back in December the 10th.
yeah,
I mean, he's been working extremely hard. He is looking to align himself with, a number of countries. So he's been out there, visiting different countries around the world. He was at the World Economic Forum speaking there. So he's getting himself out there. What I'd say today for investors is from an Argentina government process or that side of things is, I would say it's a net positive, right? And what I mean by net positive is he is looking to make changes that will attract foreign investment. So companies like Lake coming into Argentina, developing projects like Kachi, exporting lithium that provides revenues for the country. So he's looking at everything around import and export tax, how you manage dollars versus the Argentina peso, a number of things like that. So he is now the challenge he will have is getting a number of these bills passed through government, and so that was we're closely monitoring that. But certainly, we've seen a certainly big shift that would certainly attract foreign investment. That's how we see it today, but it's still early days.
Yeah, I hope he'll last because you're making some very big calls and very big changes over there. And I
Yeah.
like them, but some people don't. So it'll be interesting. David, we're kind of running out of time now. How would you sum this up for investors out there? Give me 3 reasons why you think they should be sitting up and taking notice of Lake Resources right now.
Yeah, I would say look at you look at the general supply demand on lithium. There's clearly a ramp up on lithium production that has to occur over the next 5-6 years, right? Secondly, there's been a lot of naysayers around DLE technology, and I think we've done plenty to prove that DLE technology works. Certainly from Lake and Lilac, we are super convinced this thing works. And if you look at DLE, it is I use the term is a way DLE unlocks the value of a lot of natural resource regards to extracting lithium from brine, right?
Yeah.
It is also, and starting to get some feedback. It has a very strong ESG, particularly the environmental side, has a very positive story on it, right? So, if I'm an investor, I'm looking at lithium markets. I'm looking at who's looking to produce the cleanest lithium, and then thirdly, I would say that the market is, watch the geopolitical landscape and where the diversity of lithium. I mean, most lithium today is coming from China.
Yeah.
Something like 78% of lithium batteries come from China. The world needs diversity in terms of its supply. So if I'm invested, these are the kind of 3 things that I'd be looking at. And then ultimately, obviously, progress at Lake as we go through our journey with the strategic partnering process.
It's an exciting time. One thing we didn't cover, Kachi's your biggest project, but you've got some. Are you focusing at all on those, or are they just sitting quietly in the background?
Well, I'd say sitting quietly. I mean, we're still working permits and doing some work. I mean, we have to as part of owning those tenements. But when we started to see the vast resource that we have at Kachi, obviously we shifted a lot of focus to that. I mean, one of the things that we have at Kachi is we certainly have potentially a large amount of resource, a large amount of brine with good quality lithium. So a lot of our focus and our dollars have been spent on really developing Kachi.
David Dickson, Managing Director and CEO of Lake Resources, I do appreciate your time and during a very busy roadshow here in Australia. It's time to back Lake Resources. Make up your own mind, ladies and gentlemen. For now, my name is Kerry Stevenson with Making Money Matter. Thanks, David.
All right. Thank you.